Wait, did somebody just hit pause? Stocks were slipping slightly today as investors are bracing for the massive week of catalysts that we got coming. We got a Fed interest rate decision with Jerome Powell's press conference. Watch this one closely. A key jobs report. Everybody's eyes are going to be on this. A huge deadline coming up on Friday. And all of this is colliding within just days of one another. And then add in tariff tensions, economic data that's still piling in, and when to expect a possible market pullback. We're going to be getting into all of this today. Sit tight. Let's get into it. So a quick look at stocks. We see that we were down slightly on the day in anticipation of this week's news catalyst that we got. We got the Fed's press conference we just mentioned. This jobs report. Are we going to see this labor market slow down? And we're not expecting the Fed to cut interest rates at this meeting, but we're looking for a telltale sign of what to expect in September when the market is expecting the Fed to resume cutting rates. And we got this massive deadline for tariffs approaching on August 1st, and nobody knows what to expect can come from it. And we'll get all of that a little bit later. To some investors, it just makes sense right now to just unload some of the chips off of the table. We're at all-time highs. Maybe there's going to be this market pullback here pretty soon because leading into August, it's an average month depending on the index that you watch. But some of the support to expect in August is it's a great month for stock buybacks from corporations purchasing their stock back. But on the other end, like I said, it just depends on what index you're watching, what specific stock you're watching. And for the S&P 500, August ranks in 10th place with an average return of 0.10% versus the 0.70% for all of the other months average when you consider it all in. So overall for the S&P 500, the August month probably isn't the best performance wise, but if you look at the Dow on the other end, it performs a little bit better. But like I said, there's so many factors that play in here. Then September, this is the month to watch because September is known as a poor month, which aligns with the beliefs that we've seen and covered here on this channel, where to expect a market pullback and when we should start expecting to see that creeping in. And with us being just at the tail end of July, which is historically a great month for stocks, heading into August where there's this weaker foundation at all-time highs with all of these pieces that we're talking about, with all of the uncertainty, it just makes sense to begin seeing this pullback that some economists believe can last as long as to mid-October before we begin resuming back in that upward trend. But who knows where we actually go from that, because anything could happen. We could get a black swan, we could get a white swan, who knows? But for sure, what I do know is that I'll be here to cover it. Now let's look at some of the data we got today, because we got some job openings data. And today we've seen that job openings fell to a post-pandemic low as trade wars persisted, leading to postings falling. So we see that the number of job openings was a little changed at 7.4 million. It came down from 7.7 million, being the lowest since 2019. And this is without the pandemic included in there. But on the bright side, layoffs also stayed near to record low of around 1%. We're not seeing a whole bunch of quits. We're not seeing layoffs. So overall, it seems like things are still holding pretty steady, although companies aren't hiring. Then we got consumer confidence data. And what this one revealed, if I could move that little piece, is that the Conference Board's Consumer Confidence Index climbed to 97.2, up from 95.2. And this is seen as pretty optimistic. People are feeling better about the economy. We're up 2 points about. And the Present Situation Index, based on consumers' assessment of current business and labor conditions, that fell a little bit. Still at a very high read of 131.5. The Expectations Index, based on consumers' short-term outlook for income, business, and labor market conditions, rose by 4.5 points up to 74.4 from 69.9. And what this one reads is forward-looking index. This read under 80 is yet just another recession sign to pile onto the bale of hay. I'm here in Oklahoma, so we got to make the country analogies, comparisons, but that's just another piece of data that people look for to gauge whether or not a recession's brewing, and we're under 80, although we're seeming to grow closer to 80, up 4.5 points. So that could be seen as positive, but overall the revelation here shows that the consumer's economic mood has improved, but there's a but here. While we got consumer confidence data out, I'm still on consumer confidence. So 30% of consumers feel that the jobs in this job market are plentiful out there, which is up from 29%, so slightly up. But the view of the jobs being harder to get grew to 19%, which is up from 17%, which is where this problem is, because people who felt jobs are plentiful, yeah, it's 30%, but it's up from 29%. We're up 2% as far as it's getting harder to get jobs and people's perception of how things are going. So the differential shrank to 11.3, which is down from 12.2, signaling more gloomier sentiment. And tariffs could be to blame here, but it doesn't stop there. And this is the piece that I jumped the gun on and went to a little too early. So this will be U.S. trade deficit. In June, goods trade deficit stood at $86 billion in June, which is down 11% from May's numbers, showing that tariffs have disrupted trade patterns this year, leading to imports dropping much more than exports. Now, where do we go next? It all really just depends on tariffs still. Somehow it's still tariffs that show up, and likely what happens with China. That's going to be a huge one, because China is one of the few trading partners, one of the many trading partners that we still haven't got much news on, except for today. Without a trade deal, U.S. tariffs on China will be 34%, or wherever Trump decides on. And that'll be on top of existing tariffs being as high as 80 to 85%. Greer let us know. But supposedly, China talks have been going pretty well and robust, is what Scott Bessent said. There will be an extension on the tariff trade truce between the U.S. and China. Beijing will allow the export of rare earth magnets, but U.S. export controls weren't discussed. So it's pretty much one-sided, or maybe they were discussed and they just don't want to mention that part. As far as the U.S. exports, this will be more targeted towards U.S. chips, and there's restrictions in place to prevent selling to China. But for now, this extending the truce, all really, and beyond this August 12th deadline for China, it all really depends on where Trump comes in. Does he approve it? Does he want to, put his foot down and we don't know. So we'll be watching this, but we got more news as far as China. The talks that Bessent let us know, he said that it's no secret that China buys 90% of Iranian oil, and that they warned China about possibly much higher tariffs if they continue buying oil from Iran and Russia, going further to mention the bill that's moving through Congress right now that would allow tariffs up to 500% on nations importing Russian oil. And once we go back and look, what did we see today? We see oil oil prices spike yet again. So they hit their highest level in more than a month today, after Trump said he intends to place sanctions on buyers of Russian oil if Moscow doesn't agree to ceasefire in Ukraine within 10 days. And we've seen Brent crude, the international benchmark, rise as high as 3.5% today, nearly 6% in the last 2 days. And it's just that geopolitical risk premium coming back, reflecting the danger that international events could limit supplies, and it could stick around. Russia has shown few signs of backing off its war, and Trump threats on sanctions against buyers of its crude oil could result in a significant drop in the amount of oil available in the global market. And supply and demand tells us that when there's more supply or more demand than supply, prices go up. and that's a form of inflation, and everybody hates inflation. So we'll keep on watching that, but China and India are the largest buyers of Russian oil, and if the U.S. imposes secondary sanctions or tariffs against them in connection with those who purchases it, it could have a major impact on the market. We just kind of talked about that. And while China has indicated it won't change its buying pattern, like, hey, we're not changing what we're doing for you, India has signaled compliance with the European Union and the U.S. secondary sanctions, potentially putting up 2.3 million barrels per day of Russian oil exports at risk. Now, this is where a problem comes in, and we just kind of talked about that. Russia accounts for about 35% of India's crude imports, and they don't know that OPEC has enough spare capacity to fully replace Russian oil. Now, Russia can retaliate by cutting off access to a major oil pipeline in the Black Sea port in Russia, but we'll just keep on watching this. Remember, right now, the top of mind for markets is geopolitical events are usually buy the dip opportunities, but usually we're not at like super extended all-time highs with all of these other moving pieces going on. Also, Scott Bessent said that the U.S. government will watch super closely as far as whether the European Union actually lives by its word. He says it's unlikely that they're going to lie about it, but that they invest their $600 billion into the U.S., which was part of the trade deal that was made, and that their tariff rate of 15% can change, assuming they don't live up to their word. Now, remember, this is a super low risk of even happening, and Howard Lutnick called on South Korea to bring in their best and final offer to the table as far as their trade deal they're trying to land there. Right now, the letter that Trump sent out a while back issued a threatened 25% rate. So we'll keep on watching that. It seems though if India continues to conform to not engaging in Russian oil, that may be a reflection that India relations with the U.S. are going good. Hence, if we continue down that train of thought, the trade talks between the two countries should go well. But it doesn't stop there, because who knows? These tariffs could completely disappear, because we got a big one coming up this week as Trump's tariffs head back to court. So coming on Thursday, there will be these oral arguments announced in the Federal Appeals Court. And some people are saying don't expect the tariff case to be wrapped up before Friday. This is just kind of like, hey, let's hear the arguments, see what really happens. And it really just goes back to, all right, did Trump overstep the International Emergency Economic Powers Act with some of these imposed tariffs that he put in? And what can really happen? Well, if they're deemed illegal, it's hard to believe that countries will honor these tariff deals. Like, all right, well, if these are illegal and you overstep Trump, we're not paying. But some people believe that these tariffs won't hold up in the Supreme Court, and there are ways around this mess that, all right, if Trump's tariffs are believed to be illegal, there are other ways he could get around it, and they mentioned Section 232 of the Trade Expansion Act of 1962, which is what Trump's used on steel and aluminum and automobile imports. But these options may not have the same desired result, because Trump's uses of IEEPA tariffs is intended to balance trade flows. Section 232 tariffs are better suited for reshoring industries and industrial policy. So the main takeaway here is that it's a complete pressure cooker out there in the markets, from the Fed's tone to the job market data, from even tariff chess matches going on, and this huge August seasonality quirks on top of the deadlines. Every single move counts, every single piece of news counts, and we'll be tracking it right here on this channel. So visit back, hang out with me while we learn. This is the kind of week that separates the lucky from the prepared, and I want to be a lucky guy. So I'll keep on covering this. We'll keep on learning together, and I'll see y'all next time.